Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't have to, and today we are talking about the top 3 growth stocks that you can buy right now at an extreme discount, and I love all of these companies. And without further ado, we're just going to jump right into this video. So the first stock we're going to talk about is Meta Platforms, also known as Facebook. So Meta Platforms is actually the parent company of Facebook, and they have fallen dramatically recently, which gives us as investors a fantastic long-term buying opportunity into this fantastic stock. We're going to be going over price targets, recent news, earnings reports, as well as what the stock price could be in the future and what analysts think of the stock, of course. Then we're going to talk about Splunk, which is another fantastic stock that is trading at a slight discount. That is another fantastic long-term investment. Then we're going to end the video talking about Netflix stock and why I am personally also investing in all 3 of these stocks, because overall this is a great time to buy stocks while the market is red. So for more videos like this one, remember to go and smash that like button right now, subscribe if you are new, comment your thoughts down below, and without further ado, let's get right into today's stories. So Meta Platform stock currently trades for around $200 per share, which is actually $20 lower than the low-end analyst price target of $220 per share, and it's always fantastic news to see that the current stock price is trading below the low-end bearish analyst estimate. The average price consensus among analysts for the next 12 months is $335 per share, and the high-end price prediction is $466. Right now, 60 analysts are covering this behemoth of a company, and 44 of these analysts say that this stock is a clear buying opportunity. 14 analysts said to hold the stock, and 2 analysts said to sell the stock. This is a clear growth and technology company that has a huge presence in social media and various other applications, as well as it being a fantastic metaverse stock to buy, and we're going to be going over and talking about each of these segments between their technology, their social media platforms, as well as their metaverse investments. So right now, the current FB stock price has declined by a very large margin, mainly because of their fourth quarter earnings report, as well as other macroeconomic factors that are going on right now, such as investors pulling their money out of aggressive growth stocks and putting it into more value stocks. They're also taking money out of technology stocks and putting money into the bond market because bond rates are increasing, as well as various other geopolitical macroeconomic factors such as Russia invading Ukraine. However, with that being said, this social media giant is supposed to do fantastic over the long term, which is why I also am doubling down on this stock, because it's trading at a fantastic discount. And this author from the Motley Fool actually thinks it's an excellent long-term bet for investors. Just look at it. The S&P 500, which is a fantastic stock market benchmark, has fallen close to around 7% recently, but Meta Platforms has fallen around 36% recently, which gives investors an ideal buying situation for this particular company. Buying Meta Platform stock right now is just like buying the company back at the end of 2019. This company also has an amazing competitive advantage. Its fundamentals are extremely solid, and its overall business model is both battle-tested, solid, and extremely resilient, mainly due to their social media platforms and their overall presence. Facebook alone has around 1.93 billion daily active users, and if we throw in Instagram, WhatsApp, and Messenger, which are all owned by Meta Platforms, that number increases to around $2.82 billion, which is absolutely insane. This is why they are absolutely rolling in the dough right now, and although they didn't have an ideal fourth quarter earnings report, they are still set to be a fantastic long-term company to own. But what about the metaverse? Meta Platforms is going to be one of the best metaverse stocks to invest in right now. That means Meta Platforms is investing into 3D virtual worlds. They're investing into virtual reality equipment and augmented reality devices. This allows users to visually see the metaverse and actually physically interact with places within the metaverse, which is basically just a digital version of reality. Meta Platforms has already invested billions of dollars in making the metaverse a reality, and they are extremely bullish on this idea overall. A Goldman Sachs analyst actually says that the metaverse could be around an $8 trillion opportunity, and that is absolutely mind-blowing. If you think Meta Platforms can successfully integrate themselves into this $8 trillion opportunity, there is going to be fantastic upside for this overall company and of course the stock price, because it's going to cause the stock price to surge. So is this a good time to buy? Well, let's compare Meta Platforms to other more comparable social media names and technology names such as Pinterest, Twitter, Snapchat, as well as Google and YouTube, which are actually sub-companies companies under Alphabet, which is the parent company. And if we look at their forward price to earnings ratio, Meta over here in purple actually has the best value compared to Alphabet, which owns Google and YouTube, Snapchat, Twitter, and Pinterest. So out of all of these companies, Facebook actually allows us to have the best buying opportunity at this particular moment in time because of the recent pullback in price thanks to the FUD surrounding their recent earnings report. Just look at Snapchat trading at around a 76 forward PE ratio, and even Alphabet, which owns Google and YouTube, is trading at around 23.31. So out of all of these companies, Meta Platforms actually gives us the best buying opportunity, especially if you are a long-term investor. So at its current stock price of close to $200, this is an excellent bargain, and it's one of the reasons why I personally have invested more into this company. Now I want to talk about Splunk, because not a lot of people know or even talk about this particular stock, and this is a data analytics firm. Splunk, ticker symbol SPLK, currently trades for around $115, and is trading below its low-end analyst price target of $120. The average price consensus among analysts is $162, which is a 12-month price prediction because analysts think that the Splunk stock is going to increase from $115 all the way to $162 within the next 12 months. However, the most bullish price prediction according to analysts is actually $225, so a lot of great potential upside from Splunk. 41 analysts currently cover this data analytics company, with 26 of these analysts saying that Splunk is a fantastic buying opportunity right now, while 15 analysts said it's best to hold this company for future growth, while none of these analysts said that this stock is going to underperform the overall market, and of course none of them said to sell this company. Splunk has also had fantastic achievements and accomplishments, even bringing on a plethora of very experienced management, which we will talk about later in the video. Splunk is actually in the middle of transitioning away from selling software licenses so companies can use their software, and they're switching to a more cloud-based software subscription model, also known as a SaaS model or an SaaS model. And as you can see from their chart over here, it is trading at a substantial discount than what it was trading at. Buying Splunk right now is very similar to buying Splunk back in 2019, just like when we talked about Meta Platforms. So again, this is another fantastic buying opportunity for long-term growth. But let's talk more about this company and the specific leadership in this company, which is what I'm very bullish on. The former CEO of Splunk has since moved on, and the chairman of Splunk is now acting as a temporary CEO. However, the chairman of Splunk, who's acting as the CEO, is an extremely successful executive. His name is Graham Smith, and he worked for other extremely successful companies. The company also brought on Teresa Carlson back in 2021, and she came to Splunk from AWS, or Amazon's web services. And that is an extremely successful arm of Amazon that focuses on cloud computing. Likewise, they also hired Sean Bice, and Mr. Bice also spent multiple years at AWS and Amazon's cloud computing arm, while also working for Microsoft. And these two companies are arguably some of the biggest cloud computing companies in the entire world. So Splunk is beefing up their management, which is fantastic to see, especially if you are an investor into this company. So Splunk for the last couple of years has slowly been rotating to more of a software as a service model, and that is going to give Splunk fantastic revenues. And on average, a subscription model works better than a licensing model, which is why Splunk wants to transition, because this is going to increase their overall revenue streams. Even if we look at their past revenue streams and their total revenues from 2019 all the way to present, the company has been rapidly scaling. They brought in around $1.8 billion of total revenue in 2019, $2.4 billion of total revenue in 2020, and $2.2 billion for 2021. And as you can see from their cloud services revenue, they are scaling their cloud services, which is very bullish and fantastic news. They have scaled this segment all the way from $171.2 million all the way up to $654.4 million, which is well over a 3 times increase. The best news is that Splunk's cloud revenue is actually poised for further growth in the future. For instance, according to the research firm Gartner, the global cloud market, specifically referring to revenue, is supposed to reach around $474 billion for the year of 2022. More good news is that their cloud platforms are actually set to increase from 30% from 2021 to over 95% by 2025, which is absolutely phenomenal. So we could see explosive growth from Splunk. Now, I do want to add that Splunk is not a profitable company and that it did see losses of around $343.3 million for quarter 3. This is no cause for concern because a lot of technology companies actually will be unprofitable for a while until they can properly scale their company, and then after the company is scaled, then they bring in loads of profits. More good news is that they're also involved in the big data market, which is expected to scale all the way up to $116.1 billion by 2027, which is a huge increase from only $41.3 billion back in 2019. More good news about Splunk is that they're already serving 90 of the top 100 Fortune 100 companies, which is absolutely insane. They are also trusted by the Department of Defense as well as the US Navy. So this just tells us that this is a very capable company, that they have great analytics technology, and they are extremely trustworthy because of the security of their overall platforms and products. Lastly, I would like to end the video talking about Netflix, ticker symbol NFLX. Currently, Netflix, which is a giant streaming services platform as well as company, they currently trade for around $376 per share, while the low-end analyst price target is $330. So while Netflix could continue to fall, we could still see fantastic growth for this company because the average analyst consensus for the stock over the next 12 months says that the Netflix stock should be worth over $500 per share, coming in at $507, while the most bullish price prediction is $735 per share. Currently, 46 analysts cover this stock, with 24 analysts saying to buy the stock, 18 analysts saying to hold the stock, with 4 analysts actually saying that investors should sell the stock. So why is that? Well, Netflix has depreciated in their stock price by around 35% since the beginning of 2022 or the end of 2021. The reason for this is the company reported around 8.28 million new subscribers, which actually fell below their forecast of bringing in around 8.5 million. And if we compare this to their overall subscriber growth rate back in quarter 4 of 2020, which was 22%, it recently fell down to only 9%. So investors are very scared that Netflix will not continue to scale their subscribers, which means that their revenues will also fall off and receive less growth over the long term. However, overall, I am still very bullish on Netflix stock because in the United States, Netflix currently takes up around 27% of streaming service market share, which is insane. Amazon Prime Video takes up around 21%, Disney Plus, which is a newcomer, has stolen around 14%, Hulu is 13%, HBO Max is 10%, Apple TV takes up around 4%, while Showtime only represents 2%, while the remaining 9% is a conglomeration of 9 other streaming services and other platforms. But right now, Netflix is still king, followed by in second place Amazon Prime Video, and then in third place Disney Plus. So right now, Netflix is still top dog. Netflix also has extremely strong brand recognition and brand strength, with the term Netflix actually being one of the top 10 most searched programs on Google for 2021. Netflix is a clear leader in the streaming services market, and even if they do get usurped by either Amazon Prime Video or Disney Plus, they are easily going to solidify themselves in the top 3 because they have fantastic future growth, which is why I personally am also invested into this company, and I have added more. Comment your thoughts about Netflix, Splunk, and Meta Platforms. Subscribe if you are new, smash that like button if you haven't already, and I will see you in the next YT video.